Welcome back to the channel. So if you're new here, this is just follow along with my tax-free savings account where I'm trying to build a passive stream of income with high quality dividend stocks. So if you'd like to follow along with my buys and sells from week to week and hear any news I'd like to talk about, just click the subscribe button, like the video so other people can catch on with the channel, and leave a comment. So the markets have been pretty down, especially in the last, yesterday was really bad. All the major indexes were down. So as you can see here, so far to start the day, we're down 1% or 84.36. For the week, we're down 2%, about 268.74 loss. Over the past month, we're still up 2%. In the past 3 months, we're still up 3%. For the year, we're up 1,022.12. Which is about 10%, just because we lost about 2% of our gains, but it seems to be market wide, so I'm not too concerned with our portfolio. So if we go down into the portfolio, you can see that I started a new position in Brookfield Asset Management. So this is a really good company. I've been looking into buying it for a while. So they deal in, you may notice the name, they also own like renewables company, they own a real estate company, they own an infrastructure company, and with infrastructure, that's basically like purchasing utilities, pipelines, telecom towers, what have you. They just look for really good deals out there in the market. So essentially they'll look at a piece of infrastructure, like say there's a pipeline and it's selling for less than the cost to build that pipeline, and they're going to be interested in purchasing that and then starting to produce a return. So they want to buy real tangible assets that produce cash flow for them, and they're going to take low risk, and they look for really high rates of return. So I really like that about their company, and I'll also show you like their website, and I'll even show you their CEO, and it's another reason why I really like the company, and I'll go into that further in the video. And we also bought a bit more of Scotiabank fractionally, so about 8.5 shares here. I'm going to try to get this up to 10, so slowly but surely we'll keep building that position. I also bought one more share of the Ethereum ETF. It dropped a lot. As we all know, crypto market is down, so just going to get that nice 24-25% dividend yield. And I bought one share of Granite REIT, so we're up to 5 shares. So still trying to get my real estate exposure up, and this finally dipped below $100. I thought that was a really good entry point for this company. So if you're not familiar with this one, they're just a industrial warehousing real estate company, and they have a lot of warehouses in Canada, US, and Europe. And the warehouses are for like think of like your Amazon fulfillment centers, and they also have Magna, which is like an auto parts manufacturer. So if you think about the future with EVs, there could be a lot of good things for this company, and it's a way to invest in the e-commerce and the EV sector in a different way, rather than directly into the market. You're doing it through the real estate that these two sectors need overall to grow. For Brookfield, here's why I invested in Brookfield Asset Management. So if we look at their dividends for the last 5 years, they've gone from like 35 cents per share, 37, 40, 43, and now up to 48, consistently raising that dividend. Very good sign. And we can even see the share price performance. They've doubled it in 5 years. That's incredible performance, and they seem to be able to do this consistently. I'll even show you their performance over a long period of time. So yes, they are doing asset management. They do real estate, renewable powers, like solar, wind farms, infrastructure like telecommunications towers, pipelines, things like that, utilities. Private equity is another interesting one that they do. So essentially that's investing in private companies. So as an investor in the stock market, there are companies that are not publicly traded that you would not have any access to as an investor. by owning Brookfield, you actually are participating in that. They look for good, private companies to invest in. And I believe they get about a 20% return on average in their private companies they invest in, which is a phenomenal return. That's double the SP 500. And that's probably how they're able to grow their assets under management consistently over long periods of time and get high returns on their investments, which is really good for you as the shareholder. So here is their letter to the shareholders, and it's just showing that the results over a 30-year period, hypothetically, let's say we invested $1,000 30 years ago into Brookfield. So if you invested in BAM, you essentially would have ended up with $86,000 after 30 years. And there's another index they compare to. So they compare themselves to the SP 500, which is the 500 largest companies in the United States, as an index which historically does about 10% or so. So we can see that there are some time periods where they trail the market. So after 1 year period, but after 5 years they're ahead. After 10 they're about even. After 20 years they really separate from the S&P. I mean 19 to 8. This is about double the return. So and then after 30 years they average 16%, and the S&P averages 11%. And a 5% difference in return is absolutely huge. I'm just going to demonstrate that in a calculator right now just to show you how much money that is. So I'm just going to calculate the difference between an 11% return and a 16%. So this is if you invested in BAM, again, after 30 years, 16% annual return, you get $86,000 or about 86 times your money. If we drop that down to 11, it's 22,000. That is like 4 times less. And, it's seemingly small. Like, oh, it's only a 5% difference. But I'm like, no, 5% over long periods of time is a colossal difference. Making 22 times your money is pretty nice, but I think 86 times is a lot better. And another thing I really like about Brookfield Asset Management is the leadership. So this is the CEO. His name is Bruce Flatt. And he's been the CEO since about 2002. And he's essentially helped Brookfield turn into an asset manager that owns about $650 billion worth of assets currently. And I'm just going to show a couple of interviews of him talking. And I really like his long-term views on investing, and just how he explains things very, very clearly to me as an investor. Like, he doesn't talk like a CEO with fancy words or anything like that. He talks, like a normal guy that's very easy to understand. I think it actually proves that he knows what he's actually talking about, and he's not trying to distract you with fancy buzzwords.
As an opportunity, what else do you see out there, Bruce, in this environment of business?
Look, our business is just buying globally, buying infrastructure, real estate, renewable power plants, and they all just generate cash. And we try to raise large sums of money, have the operations around the world, and then go to places where there's lack of capital. And one spot where, to pick one in the world, where there is very attractive opportunities because there is lack of capital for entrepreneurs and for businesses, and that's India. India is undergoing financial stress in their banking system today, and that generates opportunities. And the biggest thing that creates opportunity for real asset investors is being able to buy assets at less than what you would cost to build them or replace them. And that usually means that's the number one reason why you have a margin of safety on your side.
How has the risk perspective in China changed just over the last 2 years or even last year, given the tensions between our two countries?
We don't tend to think about the next year. We're investing, these projects we build or we buy and own, we own them for 2, 5, 10, 15, 20, 30, 50, 100, forever. And therefore, what happens tomorrow morning isn't relevant.
Let's talk a little bit more about the infrastructure. That is a really interesting play, because a lot of it's government money that's going to be put into these things too. What do you like there? Are there countries that you think are better prepared for that?
Here's what's happening. Yeah. Governments are over indebted, and that's even gotten worse over the last 10 years everywhere in the world because the money had to go from the banking system, the financial crisis, into governments. What that means is that they have to get money, and where big money gets spent in countries is in infrastructure, and you need to provide the services for people. Over the next 50 years, our prediction is virtually all infrastructure will move from government spending into private hands. And there is this enormous amount of capital that's sitting in sovereign plans and institutional clients, and it needs to earn 5, 6, 7, 8% return. We're really happy with, they're all really happy with that. And that's what infrastructure is, transferring from governments into those institutional clients' hands.
You can make 8% return on.
Yes, yeah.
So that's a great opportunity.
And sometimes better.
Wow, really? Private equity, what kind of returns do you anticipate getting over the next decade or two?
Do you know, our last 20 years of private equity returns have been circa 20%. What I would say is, even though rates come down, and this is the great value what institutions see in real estate, private equity, infrastructure, renewables, all alternatives, is that the spread between what you can earn if people can do the work that we do, the spread you earn compared to treasuries is still very, very high. And as a result of that, they're very attractive in institutional client funds.
Bruce, one of the things I've been struck by is the speed at which Brookfield is growing. Assets have more than doubled in the past 5 years to $550 billion. It took you 10 years to double assets before that. And now you've set out a number of different areas in which you want to expand and grow. How long does it take to double assets again?
Are you asking, will we have $1 trillion of assets in 5 years? Probably. If we don't, we've chosen not to, for a specific reason. Like, look, our business is A, make money for our shareholders, and B, make money for our clients. And that's it. We have two goals in life. Everything else is we should do the right thing. We should do all the things that run business well, all of that. But those are our two goals of the organization. And if it means we should grow, we'll grow. If it means we shouldn't grow, we won't grow.
And if we look at this map of all of Brookfield's assets globally, you can see that they have assets all over the world. So 410 billion in North America, 44 billion in South America, 117 Europe and the Middle East, and 79 billion in Asia Pacific. And they're always looking for good opportunities, good value. And you just hear the CEO talk. I have never seen a CEO of a company, focus on 10, 20, 50 years, 100 years into the future. I just don't see that anywhere. Like, you see CEOs like just desperately worried about the next year, about tomorrow, and they can make short-sighted decisions, but because the CEO is so focused on the really, really long term, so like they can buy an asset for less than it's worth, and they can hold on to that asset until a time that asset is actually at its true value. Or maybe they just keep it indefinitely, just keep using the cash flow that asset generates over long periods of time. And I really like that about this company. They're thinking so far ahead that I'm completely at ease with them managing my money and my investment in the company. And as he said, they will grow, they will take opportunities if they see them, but they will not make bad deals. They won't, overpay for anything, which is really, really good. They won't make deals just to grow larger. Growing larger in and of itself doesn't really mean anything for a company if the profitability or the rate of return, or if it's at a higher risk to the investor. So that's why I'm invested in Brookfield Asset Management. And have a good day, guys, and I'll see you in the next one.
And if you want to get free Bitcoin every single day just for shaking your phone, and $30 for signing up and depositing $100 and trading it, you can fund your account with e-transfer and buy and sell Bitcoin and Ethereum. You can join my link in the description below. You can also sign up for Wealthsimple Trade in the description below and get the value of 2 free stocks.